Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish diagonal scenario where we are looking for a 5-wave structure to the downside in the form of a diagonal where all of the impulsive structures, wave 1, 3 and 5 have to be a 5 or a 3-wave structure, wave 2 and 4 have to be 3-wave structures. Now in this particular scenario, we are looking for a diagonal where all of the waves are zigzag. So you have an A, B, C in a wave 1, 3-wave structure in wave 2 hitting the golden pocket, which is a common target for a wave 2 in a diagonal. Then you have a WXY in a wave 3. Important for this scenario is that the low will not be taken again, because then you over here have an ABC in W, corrective structure in a wave X, and then you have another ABC to the downside in wave Y. The most common target area for a wave 3 of a leading diagonal is taken from the high to the low of 1 to the high of 2 with a trend-based fib extension and results in the 886 and the 786. That is the most common target area for a wave 3 in a leading diagonal, and the 1-to-1 is an invalidation because you don't want wave 3 to be longer in price than wave 1. Now in a wave 4 we then expect another zigzag structure in a 535 or at least the zigzag family, so it can also be a WXY sharp zigzag again in a double zigzag or even a triple one, where the most common target for a wave 4 is between the 3A2 and the 0.5, which is between 27.4k and 27.6k. The golden pocket is a little bit less common, but I moved the white box all the way to the golden pocket, which is sitting at 27.8k. So that is also still an area of interest. And then after a potential wave 4, you look for a wave 5 to the downside once more in 3 waves going below these levels here. And if we look at the levels below at the moment, first of all, we still have over here inside the target box that price hit, by the way, we still have the daily naked point of control and the daily over here that are not officially touched. But also, which is maybe even more interesting, we have the monthly naked point of control at 26.6k, which could be a very, very interesting target for a wave 5. So you get a zigzag or whatever in a wave 4, double zigzag. Then you get a move towards the downside for a wave 5, which then also is a zigzag, hitting the monthly naked point of control, acting as support, and then you get a reversal back towards the upside. Now, as this is a leading diagonal, you're then looking for this to be a wave 1, then a corrective structure in a wave 2, and then you look for a much bigger wave 3 to the downside for much lower prices to come. What is something we do have to talk about is this wave 2 is not that nice of a zigzag structure. Again, wave 2 and 4 have to be zigzag structures in any diagonal. So if you try to look for a WXY or an ABC 535, then 1 2 3 4 5 over here, and then this has to be your correction and another 5. It's difficult to count the subdegree of wave 2, so that's why I don't really have it here. But another thing is that in a leading diagonal, preferably the volume is consistently moving down from the beginning of wave 1 all the way to the end wave 5, and you do see that with this weird structure we have over here, we have some higher volume compared to what we had in wave 1. So that is something to take into account. It bumps up a little bit, but overall you could say the trend is towards the downside, and at least that is something you do want to see. Now if we then go to the local scenario over here, but then not as a WXY double zigzag but an impulse. In the previous video, I mentioned it is actually quite difficult to label this as a very nice impulsive structure. 1, 2, then 3, 4, and a wave 5 to the downside. You see the vertical line on the chart. The vertical line is a fib time taken from the high to the low of 1 to the high of 4, as usually a wave 5 and a wave 1 have about a 1-to-1 relationship in price and time if wave 3 is extended. If wave 3 is not extended, then of course there can be a difference, but most commonly around the 1-to-1. If not, then the 1.618 or the 0.618. But in general, wave 5 is very long, and that doesn't really suit this move to the downside as an impulse. Another problem is that if we have a 1 2 1 2 3 4 5, you can see how short this wave 4 is compared to this wave 2. That is not nice at all. I could move this wave 4 a little bit to the right, and then wave 5 down here and 3 down here. But the problem then is you have an impulsive structure here on the lower time frame, but you never got another impulse. So this cannot be an ABC zigzag structure for a wave 4. This looks better as a flat to start XY. So you have a WXY corrective structure in a 4, then you look for 5. But that means that this blue 4 is not looking nice at all. Another thing is that you want to see another low for 5. So if we are looking at a wave 4 and a 5 to the downside, you at least want to see this low being taken. 1, then you have a corrective structure for 2, 3, 4, 5. Currently, price moving to the upside here still has zigzag potential for then a lower degree wave 4, where the 0.5 is important, taken from the highest high of the wave 2 correction to the low over here for a wave 3, right? The 0.5 is important. That's the maximum target for a wave 4, and you don't want to see the 0.5 being broken with candles closing over here. However, the real invalidation really is if price reaches the 0.618 and the low of your first move to the downside in a subdegree 1, 2, 3, 4, 5, which is 27,393 on my chart. That is that little pivot over there. So that is important. If price does move to these levels, the scenario of the diagonal gets a higher probability, or of course continuation, but at least you'd still be looking for some higher prices to come, at least in a bit of at least a 3-wave structure, something like this. Now if we then zoom out again, go to the 1 hour, then the more bearish scenario where you expect a bounce but not a wave 5 and then a bigger correction, but you expect continuation to the downside, is this double 1, 2. So I have a wave 1, wave 2, another 1, 2, and continuation. In this particular scenario, the second wave 1 and 2 are lower degree Elliott wave scenarios, counts, compared to the higher green count over here, higher degree Elliott wave count, meaning that most probable is that wave 1 and 2 are shorter in time and price, but this wave 1 is much longer in time compared to this higher degree wave 1, which is not really what you want to see. And also a price invalidation is this over here, that if we get another low but we hit this level, then this scenario gets even lower probabilities. But at the moment it doesn't look that strong for this particular scenario. And the bullish scenario is an ABC, which means you do want to count a 5-wave structure over here to the downside. Now the alternative that I see sometimes is that people have then a WXY because it's a 3-3-3 structure. The problem is that in a wave Y, an internal WXY is not allowed. So that is the reason why you can't label it a WXY. So in an ABC 5-3-5 wave move, you want to count this as an impulse to the downside, meaning you get to this structure and you want to see another low before you move towards the upside. That is very important. Target area for C, 27K to 26.6K, which also then includes the target box over here with the extra confluences that are not yet hit. And just below the 1.236, we have that monthly naked point of control. So that is very interesting. Now, in my CVD folder, there are no CVDs. So at the moment over here, yes, we have a bounce, but there are no CVDs very, very locally, at least over here. There were no CVDs. For the ones that are scalping, there were CVDs very, very locally, because price was moving towards the upside while CVD was moving to the downside in some of these pushes. So that is very, very minimal, but that is 1 minute stuff, which is not really what we cover here, of course. So at the moment on the 15, you can see price moves up, CVD moves up as well. No bullish CVD divergences here at the lows, so there's not too much going on. Then we have some news as well. Later today at 8 p.m. Central European time, we have the FOMC meeting minutes over here. So it might increase some volatility, so make sure you trade safe at 8 p.m. Central European time. And then finally, the probabilities of the different scenarios is as follows. If price moves towards the upside and invalidates a potential wave 4 over here, meaning we're going to hit 27.4K, the probabilities for a diagonal are increasing. If price can manage to move down first before moving up, then we have to think about potentially an ABC or still the double 1, 2. So over here, if price now moves down, end of wave 5, founding support. Of course, we want to see proof of support, right? It hit the target box, very nice. But you want to see proof of support if price comes down again for maybe a bounce to the upside. And then if price takes the low before reaching invalidation here, probabilities increase for an ABC for another move up or a double 1-2. But if it moves up now, probabilities increase for a diagonal. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.